Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 29th of November, 2021. And here we are now about 6:15 p.m. Central Time. Interesting markets. You know, you had a big rally back in the energies. We have an OPEC meeting going on this week right now. Will OPEC want to continue giving another 400,000 barrels of oil? If I'm on that committee, I'm saying no. Why? Well, the U.S. has taken this bravioso stand, us. Hey, we're going to release not only 50 million barrels, but we then put out one of our assistant people under Biden, and he says, and we are prepared to do a lot more. Well, the last I looked, our strategic reserves were for wartime, not for just dropping the price of oil. You can drop the price of oil, the price of oil, bring on the Keystone Pipeline. Stop with this nonsense on the federal lands. You're going to price where it doesn't make any sense to produce there. All that this administration so far wants to do is take your dollar and my dollar and give it to OPEC Plus. It's that simple. Now, I saw today one of the big banks came out and they said that in 2022, they're looking for oil prices to average $122. You realize you're looking at $70 right now. I want you to listen to this. And the year after, 150. This is one of the big banks. It was all over the news today. Why? Because we aren't producing enough. And it's going to get worse, which means we've got to rethink green along with saving ourselves. It's got to be a two-step, not a one-step, where you're giving the money to OPEC Plus rather than we're keeping it. You don't have to like what I'm saying. It's reality. And it's reality if you're bitching up a storm right now at $70 and gasoline at $2.05, what are you going to do if that thing clears $100? Think it through. Write your congressman. Can I be clearer than that? In the dollar, and not the Dow. Let's first go here to the Dow and the other stock indices. We're getting a bounce because the market doesn't know what to do with the Omicron, the brand new version of the variant of COVID. And that's pretty simple. Everybody's telling us that the cases that they're seeing are mild so far in South Africa. Their population is a lot younger than most populations. That could be one of the reasons it's that way. It could also be that the variant just isn't that powerful in terms of getting you that sick. This would all be great news. I was watching the head of Pfizer, the CEO today, was on Bloomberg, a lengthy interview, and he made it clear that he thinks that we're going to be taking booster shots for years to come. I didn't say decades. I said years to come. I know you're going to say, well, he's Pfizer. Of course he's going to say that. But until these variants get under control, that's it. But writing, so far, the vaccines that work isn't that difficult. If they can get the time frame down, it would be great. They're at about 100 days, 95 days. The way you produce the vaccine, you have to present it to the CDC, what goes on before it can be made available to the public. How do we get that cut down if that is the case? We then look at the metals, and all we hear is inflation, inflation, inflation. Okay, but it's not running to $1,800, $1,900. Where's the inflation on the gold? They say it's being held back because the dollar's so strong. Okay, I get that to a degree, but if inflation is that strong, it should run through everything. Tomorrow, Fed Chair Powell and Treasury Secretary Yellen speak, I think at about 9 in the morning in front of the Senate Banking Committee. You're going to want to watch that. Prepared text already says that Mr. Powell is very concerned about the new variant of COVID. They've said that over and over. He does think that the price pressures are going to stay persistent into the first half of 2022. He still thinks they'll abate after that. Does that sound to you like a Fed that's going to go into an FOMC meeting in December and begin tapering? This is a whole different world from 3 weeks ago, 2 weeks ago, or a week ago. You got to go back to this past Friday when this variant came out and all the voices that are saying we got to taper faster to control inflation. Is that the case? We don't know enough yet about COVID. My guess is the Fed does what the Fed does. which means it plays it safe. It doesn't do anything at this meeting, and it waits to see what the results are from the doctors, the medical science, on this new variant and what it might mean. It also buys them some time. They only just began the tapering. But hey, that's just my opinion. As we look at the S&P, you can see that the market is up 1.42%. It's still hanging around the highs. I know there's so many people that are bearish out there, but there's a number of people that came out. And you know what I heard today? This was your holiday break. In other words, it was Black Friday to come out and buy stocks. I don't know if that's true or not, but I thought it rather clever when I heard it said. The pattern on the chart is still bearish with lower highs, lower lows. If this market were to take out Friday's high of 47.17, I'd be very careful because I would think the market will go up to wherever the upper Bollinger Band is at that point. But that's only good, what I'm saying, through tomorrow. The resistance should be right here, the 18-day average of closes. But it also means that as I'm talking to you, the trend is down, the bias is down. The support was hit. The resistance has been hit recently. I think you're caught in these numbers, the Bollinger Bands, as you're spinning and waiting to see another piece of whatever type of data that we're going to get. I teach, just so you know, in my enhanced Bollinger Band course, that if a market breaks down like this, the first time you hit the lower Bollinger Band, which you did here, and you're not embedded, you're covering, if you're short, all short positions. That is not a buy signal. It's a very big difference between covering a short and going long. Doesn't mean I'm right either. Now, there's another thing that just happened here. If we take a look at this action right through there on Friday, you see that the NASDAQ had an outside day down. The high of Friday, if we look at this chart, was 16,436. If that's taken out, I have a charting rule, and it was taken out today, that the next target is the upside upper Bollinger Band. It's the closest moving average. They're all below you, the 18, the 100, and the 200, or the Bollinger Band, and that's the number that it's at. So I'm wrong in my thinking if Friday's lows are taken out. Otherwise, I think the market could make a run right up through there. I didn't say will, but it's a strong probability. When we get to the Dow, first challenge of the lower Bollinger Band and the combination of the 100-day average has shown some support. Support doesn't mean the market's buy. I understand the people that came out and said right away on today, and that was it, that this was your bargain day on Friday, and that's it. But the chart action isn't there. The chart action is still lower highs, lower lows. This is a cover short area. It is not a buy area the way that I teach charting. The Russell's the same thing. You're down to all the key moving averages. You're oversold. It's a cover area. So in a nutshell, the way that I teach does not mean I'm right. If one were short, this was the break to cover those shorts and take another look. It's validated in part by the fact that suddenly the VIX is starting to fall back. Now, if we take a look, each time the VIX got up to the upper Bollinger Band, it gets over it by a little bit, and then it starts slicing right back down. Gets to it, gets up, slices right back down. Gets up to it, gets over it, and sliced right back to the 18-day average. If that pattern's going to be consistent, I'm looking for a pullback right into this whole area in the market in fairly short order. We'll see if I'm right. In the T-bond market, we have no chart pattern that makes sense to me. You have a higher high, lower low. If you rally, the upper Bollinger Band at 163.23 is the resistance point. The market, there is no trend. Even if you get back under the 18-day average, there's nothing to do there. And you know that interest rate futures are going to be very sensitive to what the Fed chair and Ms. Yellen, our Treasury Secretary, say tomorrow. You're also going to hear more talk coming out of people. We don't have a budget. We don't have a debt ceiling resolution. My guess is Congress cannot reach one. They're going to have to go and say we're going to get something temporary into January, but I don't know what they do with the debt ceiling. I don't know that that can be extended. I think you have to find a way to resolve that. So as Congress gets back from their vacation, and they're all back tomorrow, I think they got to go to work on things like that. We'll see what they come up with. 10-year note, the same thing, a higher high and a lower low. So I'll call my professional trading word mishmash. The dollar index, if the red line closes under 79, I think you're going to pull back to this 18-day average. I think the pros bought the market on this break. It's an embedded reading, and until it's lost, it ain't lost. I think they get out if you get a reading under 79, and I still think they're looking for 97.39. But there's a warning here. There's a cloud warning. What is it? You have an embedded bearish reading in the eurocurrency, and you're losing it. It's only 620 or so right now. It's early on. But the pros that were selling that, if that closes over 21, and it's already over that, but it's early, then I think you're going back to the 18-day average of closes, which will probably cause the dollar to break as well. Big warning signs. The British pound still looks bearish. It's showing no sign of wanting to give this up. I think if it rallies more, the pros are waiting to sell this market short. Still looking for the lower band, possible test again of 132.66. December Bitcoin. Remember, November is now gone. You've got the market where, if we take a look here, both numbers are under 20, right there, first day, second, third. So you have an embedded reading. Now, if you lose the embedded reading, which you did right now, it's only, again, 620, 625. But if it stays lost, the odds favor you're going back to the 18-day average of closes. So there's reasons here that the market is leaving that locked-in downtrend that took it from this 69, nearly $70,000 all the way down to near 50 through, let's call it 54,000, and maybe it's time for the market to get a little bit of a bite. The momentum is saying you don't want to be short. In the Brent versus WTI oil, well, you got pretty high up here at the 375 level, and now you're starting to pull back a little bit. This is the week that OPEC has its meeting. Now, it was supposed to be tomorrow, we'd find out, but they're doing what they call a technical meeting. What they're really studying is they're probably aggravated with President Biden and the other allies that are joining in and throwing this token oil into the marketplace, thinking they can break oil prices with it. Folks, it's only a couple of days' supply. I don't know what you're thinking to go with all this bravado. Number two, I thought that our reserves were supposed to be if the country was in a problem. I don't know that the country's in a problem because the president doesn't like the price of gasoline. There's other solutions for that. You know that, okay? It's his policies. And I'm down on him, okay? And I would be down on him if he were a Republican with these policies. It is not about the party. It's about the policy. When you look here, you take a look, you're still falling down through here. You move to the right-hand side in an oversold condition in these energy markets. We'll see. I think the pros are out of their shorts, and I think they're observing. That's what I think's going on. Same in the heating oil. Again, these washout days have a way of the pros just saying, I'm out if they were short. And I know you get bottom pickers in there, but it just doesn't make sense. I'll give you a crazy trade. Natural gas on Friday goes up a dramatic 35 cents. I have no idea why. I'm looking at the weather forecast. I'm going, maybe they're seeing some cold weather moving in. I didn't see it. Today, the market goes down 60 cents. These are not small moves. These are monster moves. I don't know what the market's looking at, but when I see that, I walk away from the market. I haven't had there's no trend here to trade. That has been the biggest problem that this market has had. So when you don't see a trend, you try to walk away from it. Now, I want to tell you, I have a special offer for you. The offer is this. I put out, as you know, my morning subscriber videos, both in the ETFs and the futures markets, along with, for my full subscriber list, I put out 2 written updates a day. I give them chart numbers, special reports. There's so much. I'm offering my charting course for free with any 1-year subscription to our services. The services start at $156 a year. I think the ETF's $159. It's $13 or so a month. You can afford it. The course alone is $246. Go to our website. You'll see that. Or you can take your choice, The enhanced Bollinger Band course, another great value. So this is a Cyber Week special. It's going to go away. I'll show you how you get it. Take your cursor, move it up here on this video. As you move up to the top, an icon will come up. Click it. Fill that out right there, and that's it. If you want this to be a gift for somebody, we'll be in contact. Let us know. Well, then you can give it away as a gift. If you want it for yourself, fine. You need not start it today. You tell us when you want to start the course. The subscription starts for the research right away, but you can decide on the courses when you'd want them to start. I think it's a pretty fair deal. I'm Ira Epstein. You won't see this again for a while. You have a good one.